Hello, I'm Donald Leggett, and welcome to the latest London South East CEO interview. I'm joined today by Lincoln Moore. He's the Executive Director at Dekel Agri-Vision, who, as you probably know, were formerly called Dekel Oil. Dekel's stated vision is to become a leading West African agricultural business, and on Friday they updated the market with the latest half-year palm oil production numbers, the strongest yet. Greetings, Lincoln. It's great to have you on London South East, and with some good news to talk about.
Thanks for having me, Donald. Pleasure to be here.
No, the pleasure is ours. Let's start straight off with that vision. You want to become one of the leading agri-business, as they call them, one of the leading agri-businesses in West Africa. So where have you got to so far?
Yeah, our stated goal at the moment is to become a diversified agri-processing business. We certainly want to focus on being at the logistics and processing end of the market, rather than at this stage to be heavy farming, which comes with a huge amount of capex. And so we executed that program by, first of all, bringing our palm oil production plant into play, which has been operating for a number of years. We do have 2,000 hectares of our own estates from that business, but it still is quite small in terms of the throughput. It's about 95% from smallholders. So we are very much in collaboration and partnership with small farmers. And now we're looking to roll this very similar business structure onto our cashew production, which will be 100% from farmers. And in the industry, in the cashew market in particular, locally, there is a significant surplus of raw cashews. So the mill there, we're hopeful as we move towards the end of this year, next year, can move quite quickly to its production capacity. From there, we're obviously looking at an opportunity with a third commodity, and we have opportunities to leverage off the waste materials that each of the projects have developed a clean energy project, which would be a combination of biomass and solar. So they're the projects in our mind at the moment, and as we execute on all of them, we hope to be quite a well diversified and scaled up agri-processing business in West Africa.
Okay, Lincoln, thank you. That makes a lot of sense. What would the third commodity be?
We haven't publicly announced it. We've done the internal feasibility, doing external feasibility at the moment, but it'll be a similar framework where we would be in collaboration with small farmers. We'll be looking to scale or leverage off the existing cost base of the business. We have obviously land at our palm oil site. We have 7 logistics centres. So if we can run more volume, whether it's palm oil or other commodities, through the same fixed infrastructure and add scale, this is good for us, because the fixed cost base isn't going to change tremendously with more throughput through the top line.
That makes a lot of sense. Okay. As you mentioned, the core commodities you deal in currently are crude palm oil and cashew nuts. So talk us through the Ivoire palm oil project in Cote d'Ivoire. I probably mashed the pronunciation, but tell us about the palm oil project and how it operates and how you get your margins from it.
Yeah, it's the Ivoire palm oil project, and we operate one of West Africa's largest mills, which is capable of producing 60,000 tonnes of crude palm oil per year. We've been averaging over the last few years about just under 40,000 tonnes of crude palm oil, and we're obviously working with the small farmers to try and increase the throughput as quickly as possible. And one way we do that is we have a very significant nursery infrastructure where we sell something like 500,000 plants, which is about 3,000 to 4,000 hectares equivalent to small farmers every year. So we've been doing that over the last 8 years now, and then palm oil takes time. It takes about 6 years before you start seeing a reasonable yield, and 10 years to start seeing peak yield. So we're hopeful over the next few years we'll see more and more local products, so we can push more towards the mill's full capabilities. But we've got 7 logistics centres, so the farmers have many ways that they can deliver to us. We've got an excellent payment program and support network for the small farmers. And that fruit is put through our mill, and we sell ex-factory really to 3 or 4 major customers, and all of our product goes into the food market locally. You'll see our product in branded versions on shelves of the equivalents of the Tesco's and major supermarkets that you would see in the UK. So it's a great local business.
Do you have much competition locally in terms of growing palm oil, or are the farmers, what other kind of agri-businesses operate locally?
Yes, commodities. So there's always, like any business, there's always competition. The reason we got involved in the first place with the major incumbent, which was owned by a very large international Malaysian group and an Indian group, had bought the government assets, and they're very much focused on increasing their own company estates and perhaps having a slightly less focus on the small farmers. So that was our idea, to enter the market and be that partner for the small farmers. And we are, clearly the strongest of the mills in terms of the relationships with the small farmers. But yes, there's this competition for the fruit, so we have to ensure that we operate a business which smallholders are confident in. We make it, as I said, easy for smallholders to deliver through the number of logistics centres. We have a mill reception area which has double receptions and tippers versus all manual processes of moving the fruit from the trucks to the mill, so we can get smallholder farmers and trucks in and out of the mill. And we have a payment program that's obviously very supportive, a fertiliser program which is supportive, the nursery which we offer discounted plants. So there's always more to do. Recently we offered a loyalty program to our small farmers in terms of health insurance for themselves and their families. So we're constantly looking to build and continue to build the already good relationships with the small farmers as a part of the competitive strategy.
Wow, that is so interesting, Lincoln. The price of crude palm oil has been high for a few months now. So what drove that increase, and is that increase sustainable?
Yeah, it's been coming for some time. We came off 2018 and 2019 at very, very low prices. So as we actually entered 2020, prices were looking to spike. And then, of course, COVID started, and it did have an impact on short-term palm oil prices, similar to how a lot of listeners would have seen crude oil prices went negative. Palm oil prices didn't quite go negative, but during the height of the peak lockdown in March, April, May, June last year, palm oil prices dipped, which is a bit inopportune for us because that was right in the middle of the high season. But as the speculation has become back to the focus on physical stocks, people are more aware that there are very short supplies of palm oil and indeed vegetable oil, which have to account soya, because soya and palm are about 80% of the vegetable oil market. And that's led to a sustained improvement in palm oil prices through the back end of 2020. And we've obviously just during our recent high season had the highest prices I think we've achieved over the 6-month period. And at the moment, they're still sitting at a very, very high level. Crude oil palm oil prices, I guess we can talk about the future, but right now it's the palm oil prices are quite supportive.
So what was causing the shortage in the first instance, Lincoln?
Yeah, for some time, palm oil supplies have has stagnated. I mean, the development areas, Malaysia and Indonesia, which account for over 85% of palm oil, have seen massive drops in the rate of planting. Malaysia, this is due to a complete lack of availability of land and alternative land usage. You're actually seeing all palm estates being switched for property developments as the land becomes more value for property developments. In Indonesia, it's well publicised. There's been huge focus, and rightly so, on areas that have been planted which are moving into more sensitive zones. So the planting rates in Indonesia have dropped. So we're seeing a stagnation in palm oil production, and we're seeing a consistent growth in vegetable oil consumption, because it's a basic need. So it does follow world GDP rates, and it's also a product which is in 55 of the top 100 products on the supermarket shelf. So you're seeing middle class growth drive demand as well. So at the moment, what we've always thought is, we always look more medium term, that we can be bullish on vegetable oils, because the supply side does have limitations, and the demand side is still expected to grow.
And in terms of your markets, nowadays consumers are very aware that their palm oil ought to be sustainably grown. Isn't that right?
Yeah, that's right. I mean, business model again is inherently in this direction. Obviously, we're very light on planting in our own areas, which all areas which are previously had been cultivated. But the critical thing is helping small farmers increase their yield, so you're getting better yield per hectare. So in terms of it works well for us internally, but from an external point of view, we're well and truly aware that that's where the market's heading. We're going through what's called RSPO certification at the moment. It's quite a long and laborious process to be a certified producer. We're a member of RSPO. We've been through a number of audits, including the recent audit from Oxford-based group called ProForest, and we're in the final stages of moving towards certifying our mill, which gives us other avenues to sell the product into Europe, which is clearly becoming the way it's moving in terms of sustainability and certification. So it's a real milestone for us. But so I would say our business model already inherently follows social, environmental and governance points by its very nature.
Cashew nuts, let's turn to cashew nuts. That's your other key commodity. You're almost at production. So when will production begin at the new processing plant in Chibisu? And how much did the plant cost to bring into production?
We are, Donald, we're almost there. We're hopeful that we'll be first production in July. It looks like it might creep into, I would say it's in the coming weeks. It's not months and months away, which is obviously really exciting. It's
been coming for weeks, though. I'm sure your patient shareholders will tell you it's been coming for weeks and months already, though.
No, we did initially say the end of June, so there is some small delays. The challenges have actually been around logistics. We've got imported goods coming from various places around the world, and those who are actually dealing with international transportation and sourcing import products will know the challenges right now of one, actually obtaining some of these products, and two is actually shipping them. So we've ended up having to do a much more antiquated shipping process than we originally planned, where it was all going to be consolidated in Italy through a number of different countries, but it's all is on its way, and a lot of the remaining goods can be flown in. You're talking about electrical equipment, which is lighter in nature, that can be flown in. So I would say probably 2 weeks away for giving a definitive time. I mean, critically for us, what we need to do in the back half of this year, we've got 4 months or so to test and improve the processes in the lead up to the first full year. And the first full year is where we really, should do really rather well. So it's critical we have ironed out any of the commissioning stage processes which happen with any processing facility.
Oh, indeed. So you've got 4 months to commission and do your snagging.
Oh, exactly. You've got to continue to improve the raw material purchasing, which we've already bought over 2,000 tonnes of raw material. So we've got that process well worked out. There's the processing aspects of it, and critically for us is the crushing or the deshelling process, which can add a lot of value if we can increase the number of whole cashews, which sell at a high price to the broken cashews. And of course, you've got the staging and sorting and the final packaging and sales, which is an export product, and it's food. So there's elements around food requirements that we need to complete. So there's going to be a number of milestone announcements that we will deliver, I suspect, over the coming months. And then when we hit next year, it's the plan is to go to full capacity immediately, and that's where we'll see the real big step up, I think, in the overall group driven by the cashew business.
Okay, Lincoln, let's take you to money. CapEx. How much did the plant cost to bring into production, and what do you expect it to deliver in revenue terms? I mean, I understand that cashew nuts are high margin, so let's talk money.
Let's talk numbers. So the cashew capex is around 10 million euros. The initial plant size can process 10,000 tonnes of raw cashews, running 2 shifts. If you run 3 shifts, it can process 15,000 tonnes. From our perspective, we'll start next year with the 2 shifts, so 10,000 tonnes of raw cashews in, which equates to around 2,300 tonnes of cashews out. And then it's the question of the breakdown of how many are whole and broken, but hopefully we would want the whole to be as close to 80% as we can, although internally we're modelled through Arden 60%, so we think we've got some upside there in terms of the whole cashews. And then depending on the exact numbers, the revenue line for the cashew will be somewhere between 12 to 14 million euros, with a gross margin of 25 to 30%. So we're talking gross margins of around initially around 4 to 4.5 million, and an overhead line of about 1. So it can initially be, let's say, a 3-year type payback. The plan, of course, is not to stop at 10,000 tonnes, and all the infrastructure has been put in place that we can move within when we think it's appropriate to 30,000 tonnes. And at 30,000 tonnes, we're looking at a business getting close to 40 million revenue and potentially EBITDA, earnings before interest, tax and depreciation of 10 million is the goal within the next 24 to 36 months. So it's going to be a significant contributor, potentially the largest contributor, we suspect, in 24 months' time to our overall group.
Wow, so that's it's going to make a heck of a difference to the company. And where do you source your cashew nuts? And are those farmers, are those the potential bottleneck in terms of supply?
Yeah, so the area to pursue is in a different location to our palm oil. It's more in the north of the country, north of the actual political capital Yamoussoukro. It's about a 4-hour drive from Abidjan. Very good roads because it drives towards the political capital. But this is the area because the rainfall is less prevalent than the south and more suitable to cashew growing. The region is supported by thousands and thousands of small cashew producers. At present in the market, the status quo is that roughly 80% of the raw cashews are exported in their current raw state and not processed in country. So there is significant room for us, and of course we're not the only ones who identify the opportunity, others to come in and be processors locally, particularly with new technology, which can mean that the numbers of labour, which we'll be running a labour force of about 300, are not at the historical traditional levels of 3,000, 4,000, which can be obviously an enormous challenge. So we're pretty confident, we're very confident the raw product is there to support us. We have, obviously a background tick and endorsements from small farmers all across the country because of our success on the palm oil side. So people have a lot of confidence in the Dekel Agri-Vision brand, and that's been seen by the raw cashew that we've already bought today, that they're willing to work with us, and we'll build strong relations with them, just the same as we've done with the palm oil smallholders.
Okay, Arden, your house broker, you mentioned them there briefly. They think increased revenues from cashews might actually see a share price re-rating. How do you actually see that yourself, Lincoln?
Yeah, I think they've done an evaluation on the sum of parts, and if you break it down, actually, our current market cap probably doesn't even quite cover just the palm oil business. So, the view of the numbers is the cashew business has not been priced into the numbers, and that's why they've come out with a current target price of 9.3 versus a current trading price of 4.8. They're starting to price in their numbers the cashew business. But as I think that as we move to production, there's certain levers in terms of their modelling which can be unleashed. And I think the biggest one, as I said, is the level of whole versus cashews, which I think they've run with quite a conservative number. So we look forward to potentially some further price upgrades. And I think from the investor point of view, the next few months as we start the first production and we de-risk that business model and then move into an expansion mode next year, I think it's going to be a good time to take advantage of the current low prices.
Okay, yeah, it's been absolutely fascinating. And Lincoln Moore, let's stop it there. We're out of time. With huge thanks to Lincoln Moore, Executive Director at Dekel Agri-Vision, for joining us. If you're a DKL investor, you'll find free data and share price information about Dekel on the London Southeast bulletin board. All around there, you'll find free information about the company. Also, you can follow London Southeast on Twitter at London Southeast. You can get alerts for interviews just like this one if you subscribe to our London Southeast YouTube channel. Thank you so much for watching, and may all your investments be profitable ones. Thank you.